It's time for Wise Money with Korhorn Financial Group with certified financial planners Kevin Korhorn, Mike Bernard, and Josh Gregory.
Welcome to another episode of the Wise Money Show with Korhorn Financial Group, where every week we're helping you take your next wise step in your financial life. Thanks for being here, friends. My name is Mike Bernard. I'm your host. I'm also one of the certified financial planners on the program. With me in the KFG studios, my business partners and fellow CFPs, Kevin Korhorn and Josh Gregory.
So if you own or run a small business, or you're self-employed, or you've even thought about, hey, I'd like to have a small business, what financial statements should you be monitoring, and which ones will help you run the business? Now, this is one of the most common questions new entrepreneurs have, and we're helping with that and more on this episode of the Wise Money Show.
If you have a question for the program, and I'm assuming we're going to get to maybe half the program will be questions from fans of the show, we'd love to hear from you. We'd love to help you. If you need second opinion or need to start the planning process, we're here for you. Call or text 574-222-2000. That's 574-222-2000. Online, wisemoneyshow.com is where you can find us. Reach out to us there as well. Then all of our social media, wherever you're at, we are there as well. Search The Wise Money Show. All right, we are wrapping up our series on small business finances. And so therefore, like Kevin said, if you own or run a small business, this show's for you. If you are self-employed and you don't view it as a side business because it's just you, no, that's a business. This show's for you. If you have a side hustle, guess what? That's a small business as well. And there has been an explosion of individuals that are that have started their own business or had added a side hustle, something like that. So if you aren't in that category, but you're thinking about it. Hey, I might have a side hustle in the future, or I've been thinking about it. This show's for you, and this is the foundational one, guys. In fact, this series has been the first show of the past several months, and this is the one I would have started with because this is sort of laying the foundation. When you've got a small business, or let's say you're starting one, or you recently started a side hustle, where do you start? How do you get the structure of the finances? This isn't, well, should it be an LLC? Should it be an S-Corp? We've talked about that before, and your CFP can help you with that. But financially, how do you get this structure right?
Yeah. And boy, this does, as you said, this impacts so many more people today than it would have a decade ago. I think we can thank COVID for that. How many people started a business coming out of COVID, a side hustle or whatever? It exploded. There was a more than a 20% increase between 2019 and 2020 alone.
So just a quick tangent on that. Stanley Druckenmiller, famous investor, just did an interview maybe about a month ago with CNBC, I think. He talked about the difference between COVID and the Great Depression and how financially and monetary policy we've been treating, Congress or the powers that be, have been treating this as like it's the Great Depression. But there was an enormous difference. Back in the Great Depression, there was very little opportunity for entrepreneurship. And right now, we have entrepreneurship growing off the charts. You might say this is one of the most exciting times to start a new venture.
Yeah.
And I hadn't thought that before, and I completely agree.
You know, and it's getting younger and younger as well. In fact, I don't even know if I've shared this with you guys, but we've got 3 kids. My middle child, Justin, he has been begging me to start a business since he was 9, maybe earlier, really. He's one of the most entrepreneurial kids that I've ever known. And I've just been putting it off because, it's like getting a puppy. Mom, I'll take care of. Dad, I'll take care of the puppy. But no, it's really going to be the parents' project.
Yeah. So
I've been resisting. But just this year, Justin turned 15, and he's been wanting to start a sign company, making signs that you would decorate your house with, that kind of thing. And wants to sell them on Etsy. And,
cool.
How he even knows about all this, it's beyond me. But he's done his research and all that. And we let him. And we helped him set up a business. And he's been making some signs and getting them posted and all this. But we've been walking through the process as if he's starting a multi-million-dollar business, It's more to me about the learning for him. But maybe we can kind of even unpack some of the steps that he's gone through. But whether you're starting a business, mowing lawns for the neighborhood, or starting a restaurant, starting whatever, it doesn't matter. When you go into business, there are just some fundamental foundational things that you have to put in place to protect yourself, to make sure that you're running it efficiently. And if you haven't listened to some of those shows that talk about how do you set up the entity and everything, I'd encourage you to go back and check them out.
So you set up the entity for sure. And then, and you might say, well, this is obvious. It's not. Set up a separate business bank account. And oftentimes people think, well, no, we'll see if this thing takes off. We'll see if I even sell one sign. And everything is sort of just commingled within your personal checking account. No. Set up a separate business bank account. And then if you're saying, oh, that's obvious, you might also be thinking, oh, that's easy. No, you can set up a bank account online in 5 seconds right now. But when you're trying to set up one for your business, no, there's an approval process. There's more involved. So one is you need to separate. Josh, you said this in one of the very first shows. You need to separate your personal financial life from the businesses. And the foundation is you got to open a business bank account, business checking account, business savings account.
That's right. But the prerequisites to get there are the ones that you mentioned in passing there. For Justin, what we started with was we filed an LLC with our state.
Yep.
It cost him $50. He was eager to do it. No big deal. It was his first investment into the business, $50 to get it filed. We picked his name and all that. We created an LLC operating agreement and everything. And that allowed us then to apply for a federal EIN or employer identification number. Think of this as like the Social Security number for the business. It needs to have its own separate identity from you so that you can go then to the bank and set up the bank account for this business. It also allowed us to have a debit card for this business so that he could actually do some transactions. But what that does, as you said, Mike, is it separates your personal financial life from the business so that if something blows up, if something goes wrong and there's a creditor coming after you, someone's suing your business, that sort of thing, you're creating hopefully a container, a protection or a moat around your financial life containing what happens within that business.
But it's not just a liability protection. If you don't keep things separate, you create such incredible complexity.
Yeah.
And as people go, they're like, oh, well, yeah, I took it on my personal account and I paid for that and it's a business expense. But I know at tax time, I'm going to get all this stuff really organized. And you are not. You are absolutely not going to get it organized. And then you're going to extend. And then you're going to be in October saying, I have to get my taxes filed. And I still haven't unwound this horrible ball of string that I created a year and a half ago. And I don't remember any of this stuff.
No, okay. So I see I bought toothpaste here. Was that toothpaste for the business or personal? Right? So, yeah, you want to keep that stuff separate. And I would also say, yeah, you want to have a business credit card. Now, maybe not Justin at 15, but many businesses, you're starting where you have to put some of your own personal money into that business bank account because there's some startup expenses. Well, if you're borrowing anything, even on a quote unquote short-term basis, you want to have a business credit card as opposed to a personal credit card.
Mm-hmm. Yep. That's exactly right, because you want all those transactions to be recorded for you in one place. Everything is going through one bank account, one credit card. You don't have to wonder about, as Kevin was saying, do I have all of my books and records clean? Do I have all of the data that I need in order to file the tax return? No, keep your life simple. There are some people that is the extent of their financial record keeping. They have one bank account, everything that they generate in revenue goes through that bank account. Everything that they pay out in expenses comes out of that same bank account. So the bank account itself becomes a paper trail for them, essentially. Mm-hmm. And you want it to be that simple, especially early on in the life of the business.
Yeah, completely agree. And then, some of the advice or working with your CFP, working with your CPA, knowing, well, when I do inject cash, if I'm okay, we're starting a small business. I need to put $5,000 in that account because I know there's going to be some expenses. I got to buy some of the wood or materials to make the sign or whatever. Well, how is that treated when you put your personal capital into the business? How is that treated on the financial statements or on the tax return? And then how do you get money back out? Are you allowed to just transfer it? What are the tax ramifications? That's probably, guys, honestly, that's probably one of the biggest questions financially as people are starting small businesses or have a small business. That's one of the biggest questions. We're gonna hit that. But then kind of in between, and Josh, you left off on this, was, well, there's this automatic paper trail when you have things separate. Well, what does that paper trail actually look like? Or what structure, how formal should those finances be? So we've got that and more coming up on the Wise Money Show with Korhorn Financial Group. Hello, YouTube. Thanks for being here. This is the Wise Money Show. What you're watching right now is our weekly 1-hour talk show that airs right here on this channel, 10 a.m. Eastern Time every Saturday morning, also on podcast at the same time, and also on a couple local radio stations as well, which is why the content's broken up the way that it is. It's a talk show, so there's a lot of banter and back and forth. But if you want something more direct, taking one financial concept, applying it directly to your financial life, make sure you hit that subscribe button, turn on notifications so you're made aware every time we drop new content, because we have Next Wise Step videos that air all throughout the work week, Monday through Friday, and are tailor-made just for YouTube. So if you like the content, you can share it and leave comments below as well. We appreciate it. All right, I didn't want to get into P&L or how you manage the financial reporting, but I wanted to tee it up. So anyway, so we can go right there, right?
Sure.
Okay.
So yeah, I just had this conversation with someone, because the confusing thing is, if I get to the end of the year and I want to reduce my profit, can I just take a $10,000 distribution? And the answer is yes, you can take a $10,000 distribution, but that doesn't affect your profit, because the business owner's thinking my profit and loss, and that affects your balance sheet. And understanding the difference between the two, like I don't even know how, if we even try to explain that.
Well, we have to explain a little bit of it. Profit, cash, taxes, how you take money out. We'll get there. Here we go. With your small business, or let's say you're starting a side hustle, how formal do you need to be managing the monthly expenses, income and expenses? Is it just a once a year event? Do you need to make it more formal? And what's that process look like? We're helping with that right now. This is the Wise Money Show with Korhorn Financial Group. Thanks for being here. My name is Mike Bernard. With me in the KFC studios, Kevin Korhorn and Josh Gregory. Every episode of the Wise Money Show is on podcast, wherever you listen. Go search the Wise Money Show. Subscribe to it there. Follow us there. Rate the program there as well. We appreciate it. All right, so you've got a side hustle going. It turns out my brother shared this with me last time we were talking about finances, and said, you know what I love? I love cutting grass. I'm like, what is wrong with you? What's wrong with you? And he says, honestly, I would love in retirement to have a side business where I'm doing landscaping and mowing lawns and all that. It's just peaceful. He's like, I don't have to worry about other people. I can put my headphones on. I don't have to worry about the challenges and stressors of the world, and I can just cut grass. And he is meticulous. He's very detailed. And so it kind of fit when he said that. But say you're doing that. Say you've started this side business and you've got your regular income and your job, all that sort of stuff, but you've got this side income. Well, do you need QuickBooks? Do you need to create monthly financial reports? How formal does this need to be? Or just once a year, do you take the box of shoebox the shoebox with all your receipts, take it to your CPA and say, here, you deal with it?
That would not make you very popular with most CPAs. I think they, during tax season, don't want to be combing through a bunch of receipts for you. But boy, you're referencing, though, the fact that keeping good records throughout the business can do two things for you. It can help you know, how is the business operating? Is there anything that you could be doing differently to help the business be more healthy, more successful? Kind of keep your fingers on the pulse of the business, in other words. Businesses that have grown and have reached some success and are really thriving, this becomes more and more important. It's how do you manage this growing enterprise well? How do you be a good steward of what's in place there? When you're just a brand new startup, we were talking about my son Justin and Marcus Signs that he started this year. It's so small, right? Small amount of sales and things. It doesn't need to be too formal. ultimately, the second reason that you have to have good books and records is because you're going to file a tax return somewhere, somehow. And for most businesses or business owners, you've started up that side hustle. Maybe you have a job where you get a W-2 wage at work, but then you do the grass cutting on the side or something like that. That side business, if you started that out as a sole proprietor, which is the most basic and straightforward business structure, or you set up an LLC that you own in your name alone, then the way you're going to be filing their taxes is on a Schedule C. It's just an added form that gets tucked into your tax return, and it basically itemizes out what income came into the business, what expenses went out, and what was the profit left over, because that's what Uncle Sam wants to tax you on. The reason I'm mentioning this Schedule C is because it could be a template for you. You know, it has categories already listed out, things like advertising and did you have any car expenses like mileage? Did you have any legal fees? What kind of supplies did you purchase? That sort of thing. All of these are different categories that you're going to be writing things off on your tax return in. And so you could, as simple as keep a ledger in a notebook. It could be an Excel document that you have. Some people, as we said in the last segment, they just run everything on the same credit card or through the same bank account. And at the end of the year, they go through transaction by transaction and they just put everything into categories all at once. That is only okay for the smallest of businesses. And they have other ways of keeping track of the health of the business throughout the year, though.
Yeah, I was thinking of that as well. I mean, even if let's say you started the business 1/1 of the year, and you get to 12/31, on 1/1, you put $5,000 of your personal money in there. And by 12/31, you take you look at a 1-year statement. How much went in? How much came out? So how much do I have left? Well, you have $10,000 left. Okay, so $5,000 is my profit. No, not that easy. Mm-hmm. Not that easy. What if you bought a $1,000 lawnmower? That actually might be expensed differently. What about all those miles that you drove? Well, I was putting the gas on my card. Well, there might be a different deduction that you could take. So for the smallest of businesses, yes, having I don't know if you can say ledger and simple in the same sentence, Josh. You tried to pull that off, but an Excel sheet or something where you're just keeping track. But that's for the most basic.
Right. So think in terms, and this is not a critique, but think in terms of that will work if I have a job. Now, and you say, no, it's a business. Okay, it's a business, but it's more like a job. When you look at the phases of growth, if you grow that, that business, it will likely outgrow that simple system. Mm-hmm. But I would keep my systems as simple as possible, as long as it's appropriate for what's happening. But don't hesitate if you believe there's going to be some pretty exciting growth to get out in front of that and say, okay, I know I was tracking everything in Excel. I've got to get on QuickBooks Online.
That's right. And what QuickBooks does for you is it allows you to categorize things. It allows you to automate a lot of the process, that sort of thing. But ultimately, it's for the purpose of generating financial statements. Mm-hmm. And these financial statements are sort of your monthly report or your quarterly report on the health of the business. It could be telling you things that, if we think of the 3 different financial statements, you've got a balance sheet, an income statement, or sometimes we call it a profit and loss, and then a cash flow statement. And they're all interrelated, and they tell you different things, but ultimately is this business running efficiently? Is it running profitably? Are we pointed in the right direction, or do we have a problem that we need to deal with? If you're not checking that regularly, you could find yourself in a ditch. You could find yourself off the rails, and it may be too late to even recover from it. And so to me, the benefit of keeping great books and records and generating these financial statements is so that your business can thrive. A lot of people just think of these financial statements as keeping stuff organized so I can file a tax return at the end of the year. You have to get beyond that point of thinking of your business records as just preparation for a tax return.
Right, because it could help, that's a simple case, but it could help Justin know how to price his goods or services, or saying, hey, my material costs are way too high right now because I'm not making money, so we got to find a cheaper way. For my brother who wants to do landscaping, I need to change my prices, or I'm not getting enough revenue and I could afford to reduce my prices, something like that, to attract more business. So looking at these, it's bigger than just a tax return. Now, those financial statements, balance sheet, profit and loss, cash flow, Josh, you're pretty good at this. How would you simply define each of those? What's a balance sheet, just to level the playing field?
Yeah, so a balance sheet is just a snapshot at a moment in time of what your business owns, the assets of the business, subtracting out the liabilities that you owe to other people to come up with a bottom line of what's left over for the owner or owners of the business. We call that owner's equity. And it's just a formula that keeps track of these things. And as you put money into the business to get it started, as you generate profits and you build up cash within the business, that could give you a false sense of security potentially. And so you also need to pair that with the profit and loss statement, which at its simplest definition is just adding up all the revenues, all the sales or the income into the business, subtracting out all the expenses, what materials went into your product, or what did it take to generate your services for these businesses or for these customers. When you subtract out all the expenses, is there something left over at the end? Is there a profit, a reward for your hard work and the risks that you took? And a business has to be profitable over time so that it can continue to grow. If you don't have a profit, if you have a loss every single year, then you're going to watch your balance sheet get weaker and weaker, and eventually you're out of business.
And even the IRS for your side hustle, if it turns out that Justin can't make a profit, can't make money at this venture, but he loves to do it. I like it, and the message on these signs, it's part of my calling. The IRS might say, listen, that's a hobby. You're not making money, and you're still doing it. So this is a hobby. You're doing it for your own enjoyment, and we're not going to let you deduct the loss. Now, we're not going to force you to claim the income. If you've got expenses that offset all your income, that's fine, but we're not going to give you a tax write-off for this. So working with your CFP and your CPA on that. All right. More planning strategies for your small business. That and more coming up on the Wise Money Show with Korhorn Financial Group. All right. How often should you be looking at those? So we'll hit that. And then are there certain components of the balance sheet or the P&L that you should be looking at? I think that can be pretty quick. And then we'll get into that. So profit versus cash,
balance
versus
sheet,
taxes.
Income statement, and statement of cash flows. Do we?
Yeah.
We didn't really unpack that one.
Which one?
The
Cash flow.
statement of cash flows.
I didn't know that Justin was so interested in entrepreneurship.
Yeah.
I think it's a really good sign.
That's funny.
All right. Here we go. Third segment.
He can make you one.
I know. Well, dude, I want some signs. I want digital signs, though.
Oh.
You can do that. Dude, tell him. I'm a believer.
Okay.
Come on, Big J.
Here we go. If you own or run a small business, maybe a side hustle, how often do you need to look at your finances? You might even be listening saying, what do you mean finances? I just sort of do the work. And we're helping with that structure right now. I'll give you advice on how frequently and what you should be looking at. This is the Wise Money Show with Korhorn Financial Group. Thanks for being here. My name's Mike Bernard. With me in the KFG studios, Kevin Korhorn and Josh Gregory. Stay up to date on all Wise Money content. Find us online, wisemoneyshow.com, and then all over social media, wherever you're at. We are there as well. Search the Wise Money Show. So whether you're running a small business, if so, you probably already have a lot of this figured out right now, although the timing of how frequently you look at these statements, that's something we help a lot of small businesses with. Or if you've got a side hustle or thinking about starting a side hustle, what financials do you look at and how frequently? Josh, we didn't talk about defining the cash flow statement, and I think on the surface, it's easy to confuse the profit and loss or the income statement with the cash flow statement.
Yeah, so a cash flow statement is sort of the bridge between the balance sheet and the the profit and loss. It basically just zeroes in on the cash position of the business. What are the activities that cause the cash to go up or cash to go down? And the primary activity you hope that's driving all of this is profitability of the business, right? So at the end of a month or at the end of a quarter, at the end of the year, whatever, you look back and you say, how much profit did we generate and what did that do to our cash position? The other things that could cause cash to go down are, well, you bought some equipment or you bought some more inventory. And so you still have assets in the business. You have stuff to sell. There's things on the shelf for customers to purchase, but you don't have as much cash.
Yeah.
And then finally, another thing that could cause cash to go up and down is you either putting cash into the business, injecting some capital, or pulling money out. Maybe you want to take some of those profits and take the family on a vacation, or you're going to go invest in something else. When you pull cash out of your business, obviously that reduces the cash position as well.
So we're going to get to that here in just a second. The big confusion between profit, cash, and taxes. We're going to get there. But how frequently should someone be looking at these financial statements, balance sheet, profit and loss? And then are there certain things on those statements that you would say, nah, this is something you really want to pay attention to?
Well, and I think that when you get to a point where you've got your balance sheet, your income statement, and your statement of cash flows, you are beyond running everything through the bank. Now, the problem is if you used to run everything through the bank and you're used to looking at your bank balance and that gave you an indication, once you've graduated to this next level, the bank balance isn't going to help you. So I would encourage you to not look at your bank balance. Yeah. It's kind of like flying by instruments. Trust the instruments.
Yeah. So an example of that might be you've got a big bank account balance, but you also have a bunch of money that's owed or some checks that haven't cleared yet. Mm-hmm. You haven't accounted for the tax liability that needs to be paid, that sort of thing. So you're right. While it is definitely true, if the business runs out of cash, it may be completely out of business, period, yes. Right? So the cash balance absolutely matters. In fact, there are all kinds of metrics that some people will track. One of the things that we pay attention to at Korhorn Financial Group is working capital. And working capital is where you take all of your most liquid assets. Usually that's cash, could be some money market accounts or some treasuries or whatever. Most liquid assets could be even accounts receivable, money that is going to be cash at least in the next 12 months or less. And then subtract out what you owe to other people in the next 12 months. That could be a credit card balance that's going to be paid off, next month. It could be the next 12 months worth of loan payments that you're making. Some other bills that are due. But when you take all the cash that you've got or the liquid money and pay off everybody else, what's left over? That's your working capital. And you need to have a healthy amount of working capital in order to just sustain the business. We always talk within our business that our cash position or the working capital position is one of the shock absorbers of the business. Businesses don't operate in perfect weather all the time, right? You get into some choppy seas and some ups and downs. And so how do you absorb that? How do you handle it and not run the risk of going out of business just because of a downturn in the economy?
So then how frequently should you look at this? We recommend looking at it on a monthly basis, at least. There's some businesses where the seas are really choppy, and you might want to look at some of these measures on a weekly basis, but hard to look at an actual balance sheet midpoint or profit and loss midpoint through the month because expenses are lumpy and income's lumpy. Mm-hmm. So looking at your balance sheet, profit and loss, and cash flow statements at least once a month, that's what we would recommend. Balance sheet, I would compare, all right, what's the balance sheet look like today compared to a month ago? Mm-hmm. The profit and loss, what does the profit and loss look like compared to what we projected it would look like, the budget? And that many businesses don't do that. Oh my goodness, we would strongly encourage you to do that. So how'd the month actually look compared to what we expected year to date? compared to what we expected? And then how the year to date, how's that compared to last year to date? Or even how's this month compared to this same month last year? Are we making progress?
That's right. It helps you get through the noise or just the gut. You may be feeling like, man, the business is just hard right now. And you might not even realize that actually you're having some great success and you should be encouraged. Maybe there are even some areas where there's green shoots that you should be fertilizing and trying to encourage more growth within the business. You don't see that if you just get into the whirlwind of running your business, taking care of customers, making sure there's money in the bank. If you get too wrapped up in the operations and you don't zoom out to check the results, check that you're still pointed in the right direction, check that there's still a margin of safety for the business, then again, you can get yourself into trouble, and maybe it takes a long time to recover from those things.
Yeah, and the confusing thing is when you look at your profit and loss statement, you would expect that your profit, if I have $100,000 of profit, that I have $100,000 of cash in the bank to equate to that, and that's never the case.
Well, especially not if there's any kind of debt in the business. Because if you have a loan on a piece of machinery or a vehicle or something like that, every time that you make a payment to the lender, to the seller of that piece of equipment, some of the payment goes towards the principal or paying down the loan. Some of it is interest. And one of the most difficult things to get your mind wrapped around, because it just doesn't seem intuitive, the portion that pays down the loan is not an expense.
Right.
It's just a repayment of the loan. The expense piece is the interest. And so you could have cash flying out the door, paying down debt, doing good things with the money, and yet your profit is so much higher than what you have to show for it in the bank. And the real risk with that is you have a big profit, you don't have any cash to show for it, and now it's time to pay Uncle Sam for taxes.
All right, so let's wade into this. Josh, you have 10 seconds to explain this. I'm just kidding. But there is a very confusing difference between profit that you're going to have to pay tax on, cash that's in the bank, and then how you actually pay those taxes or the tax consequence of it. So let's start untangling that ball of Christmas tree lights.
Most of the people listening today will be business owners who they pay their taxes for their business on their personal return in some way. That could be you're an S-Corp owner and the S-Corp pushes all of its profits through to your personal return. You could own an LLC. You could be a part of a partnership. Most of these businesses are pass-through entities, and all that means is you're paying the taxes yourself on behalf of the business, which means that the business needs to be able to push some cash out of the business to you so that you can pay those taxes. Well, you can't do that if you don't have any cash, right? Yeah. If you took all of the cash out of the business at the end of the year to, have some fun or to help balance the family's budget at home, that sort of thing. If you spent it on other things or you used it to pay down debt, you may get behind the 8 ball when it comes to your taxes. And this is one of the reasons why we encourage business owners to have a plan throughout the year, to be paying quarterly estimates that roughly, that they match what they should be based on the profitability, that lumpy profitability of the business throughout the year.
There is a very common phenomenon for new businesses where you get in this doom loop with cash, profit, and taxes. We're going to explain what that is, how you avoid that more coming up on the Wise Money Show with Korhorn Financial Group. All right, very short break. Did you want to send a message to?
I did already.
Okay.
Yep.
The old doom loop.
All right, here we go. 4-segment, land on the plane. BOIR. We'll see where the conversation goes. We'll see if we can sneak a question in.
Do we want to start with BOIR? Start with doom loop.
Yep.
Okay.
Thanks for being here. This is the Wise Money Show with Korhorn Financial Group. My name is Mike Bernard. With me in the KFG studios, Kevin Korhorn and Josh Gregory. Every episode of the Wise Money Show, as well as a lot of other content, is on the YouTube channel. Go check it out. Go to YouTube, search the Wise Money Show. Subscribe to it there. Turn on notifications so you're aware every time we drop new content. And the weekly talk shows are there, as well as all the content that we create throughout the work week. Next Wise Step videos, well over 1,000 videos. So go to YouTube, check it out. Search The Wise Money Show. Subscribe to it there. All right. This is the last show in the series on helping your small businesses. So whether you own or run a small business, whether you're self-employed, guess what? That's a business. Whether you have a side hustle or you want to have a side hustle in the future, this content is designed to help you get the foundations right and avoid missteps. Here is a very, very, very common misstep that ends up, one, creating a lot of financial stress, and number two, could mean so much financial stress, it drives you out of business. Here's what happens. You start your business, you have no idea whether this thing's going to be profitable or not. You are making minimal viable product. It's what they talk about in the tech world, but you've invested just enough money to get going, but you know there's more investment to come, okay? And you're just trying to weigh it all out. Well, you get through the end of to the end of your first year, and you've actually made some money. So you start using some of that money to buy some of the more material or make bigger investments because, if we're going to do this, we also need this and this and this, and that will help us grow. And then by the time you get to April, you're already into this next year and thinking about the growth and everything else, and you find out, there was a bunch of profit last year that you have to pay tax on. You didn't pay either enough estimates or you never paid the tax. So now you owe thousands of dollars, 10 grand or so in tax.
By April 15th.
By April 15th. So you take that tax out of the business because that's what caused the tax. So you take that tax out of the business and you pay Uncle Sam. So now you have less cash flow. But less cash. Here's the question. That money, say 10 grand that just came out of the business to pay taxes, is that an expense? It's
no.
not.
Right.
It's not. So now you have less cash because you had to pay taxes, but you still have that much profit. And so you get caught sort of behind the eight ball. And here's the thing, because you had a profit for that first year and things are going well in the first quarter, now your CPA is telling you not only do you need to pay the taxes from last year, you need to pay an even bigger estimate right now. And when's that due? April 15th, the exact same time. And so you have to pay higher estimates, but the business is doing well and is showing more profit. And so you get to the end of the year and the same thing happens. I've got to pay a bunch more tax last year because I didn't have the cash flow because it went to pay the taxes from the year before. And that's this death kind of tax doom loop.
That's right. We talk on this show all the time about how important it is to be doing proactive tax planning. And tell me a more important group that is absolutely true for than business owners or people who have a side hustle, that kind of thing. Because of this exact situation, you are adding potentially more profit, more income to your tax return, and are you dealing with the tax as you go throughout the year? Well, how could you if you're not doing the right calculations, the right projections, that sort of thing? Nobody's going to guess as to what the right amount of tax is. This is a calculation. It's a projection that can be done with your certified financial planner, with your CPA, and it's your way of staying out in front of the tax bill, knowing what it is long before the bill is due so that you can deal with the cash implications of that tax hit.
And if you've ever had a tax surprise, I would analyze that and say, why was I surprised? Now, I've actually seen small business owners where they do their own books, and in their books, on their profit and loss, they deduct what they pay in taxes.
I'd say that's a lot of them.
Right.
Most of them. That's the money came out of the business.
Right.
It's for taxes that was caused by the business profit. So they have it and they're tracking their financial statements as if that's an expense, and it's not.
So if your financial statements are wrong and your CPA who's preparing your taxes doesn't help you with that, your stuff's just going to be incorrect.
Yeah, most CPAs will catch that sort of thing. They'll get it fixed for you so that you're not filing an incorrect return. But the risk is all along you thought you're going to have no tax bill because I'm not showing a profit this year. No, actually there is a profit there potentially because maybe your books weren't quite right. And again, the question is, can you deal with the tax implications?
Yeah.
And you want to get a great if you're listening and you say, yeah, I've had a tax surprise, here's what you want. You want an operating system that works almost by default and gets your taxes paid and keeps you in compliance, but optimizes for helping you take advantage of the right ways to shelter income, reduce your taxes, do these other things.
Man, one of the hardest conversations I ever had with a client, she was brand new at the time, and we were helping her with her taxes, and I had to share with her a tax surprise that she didn't see coming. And it was because this was back when the Affordable Care Act first came into effect. And she, during COVID, lost a job, started a side hustle, and it did so much better than she ever imagined, and so much better than she had even planned for when she was signing up for health insurance. Mm-hmm. And come tax time, all of a sudden her income is higher than imagined, and because of that, she had to pay back a whole bunch of premium tax credits. And it was just simply because it wasn't on her radar, the tax consequences of the business ultimately. Mm-hmm. And so that's something to keep in mind as well. It's not just about paying the tax that you think your business owes or you're going to owe because of your business. Recognize that your business is now having an impact on your personal life, and it could be creating even more tax consequences elsewhere if you're not paying attention.
Now, quickly here, there's often in this tax doom loop, there's often this look of, oh, well, is there anything I can do to shelter the tax? And that actually is one of the positives that comes out of this. When you start a small business, or a side hustle, you now have different or new retirement accounts that you get to fund, tax shelters that you can fund. And so whether that's a single K, whether that's a SEP IRA, whether that's something else, working with your certified financial planner to explore what are those opportunities for you to shelter some tax or some of this income from tax, but also help you make progress in your financial life. That's one of the big positives. So you want to be exploring what those options are. All right, let's take a detour before we wrap it up. Josh, did Justin complete the beneficial owner information report for his newly established enterprise?
No, his dad did.
Whoa!
Actually, I was in the driver's seat. He was next to me, mostly because the business, it's in my name, right?
Got it.
Because he's a minor.
Yep.
So there's a new requirement this year. If you've been in business prior to 2024, you need to be filing this beneficial ownership interest report, BOIR. And this is a new requirement. It's basically for the government to be able to match up you as the owner, know your personal information, essentially. How do they get a hold of you? That sort of thing. This is crime enforcement stuff, right?
So making sure that the business isn't a shell operation for another shell operation for another shell operation that's actually doing some unscrupulous stuff. You'd think that this was already in place, that these double checks already happened when you applied for that EIN. It didn't. So it's brand new. Now, fincen.gov is where you can find information on it, or just search beneficial owner information report and you'll find it. If your business was set up prior to 1/1 of 2024, you have all year to complete it. But if you started a business in 2024, you have, 60 days or 90 days? 90 days this year. Starting next year, 2025, as soon as you start a new business, you've got 30 days. It essentially is becoming something that needs to be done when you're starting a business at that time. Now,
or when there's a material change to the owners of the business.
The owners, right? Or the officers of the business. So this is a new requirement. Make sure you go do that and stay in compliance there.
Mostly all I needed in order to fill it out, I needed to know my address, the address of the business, and I had to upload a copy of a driver's license. Could have been a passport. There's a few other documents, but that's how they prove your identity and match you to the business.
If you have a side hustle, if you own a small business, you need to be doing comprehensive financial planning. There is complexity there that you need to plan through to avoid surprises, capture opportunities. That's all the time we have for today. On behalf of Josh Gregory, Kevin Korhorn, all of us at KFG, have a great weekend. We'll see you next Saturday for the Wise Money Show with Korhorn Financial Group.
Securities offered through Silver Oak Securities, member FINRA/SIPC. Advisory services offered through KFG Wealth Management LLC. Doing business as Korhorn Financial Group. KFG Wealth Management LLC and Silver Oak Securities Incorporated companies are unaffiliated.